coming into today, you had the S&P up almost 8% in 10 weeks. I think about a week ago, you could have looked ahead to this week and said, wow, you know, there's some obstacles ahead. You have the Fed, you have the European Central Bank meetings, Bank of Japan, North Korea summit, and of course, this kind of deadline on the China tariff measures. And the market held up really well till today, when I do think, honestly, it was set up for some kind of a rest or a reset. Now, what are the things that were telling you that that might be the case, aside from the fact that we're up kind of a lot? It's probably that the leadership was a little bit stretched in terms of big cap tech, but also things like put-call ratios. Traders were looking a little bit complacent or a little bit over bullish on a very, very short-term basis. But here we have the trade and tariff concerns, I think, serving the same purpose they've served all year, which is to provide a little bit of an excuse to keep sentiment in check and to kind of have certain areas pull back a little bit. It's a distraction and an annoyance to investors. It's not a game changer for how this market is going to proceed months ahead, or probably how the economy does it. So I do think right now the market trend it's in pretty decent shape. Leadership looks fine, but it's an uneven market. You have lots of winners, and I mean, you have winners and a lot more losers right now. It's not necessarily a narrow market. It's not just FANG, but it's uneven. It's obviously penalizing you in some areas.
Yeah, but our point too is that you can't have a resurgence without tech and how large a part of the market it now is, and the way that investors have been placing their bets in that space for nearly now as long as we've been talking about this story of the rally.
Sure, no, there's no doubt. I mean, the math tells you that. Honestly, it's this whole software area that's really been the one that's moving. So you have the kind of platform companies that everyone talks about, and then all these emerging software companies you never heard of. And the IPO index is at a new high right now. So the risk appetites look fine to me. Is it good that the banks don't look so great right now? No, I don't think it's good, but it's offset by the positives out there. Also, semi-cap equipment. Seems like they've rolled over. Is that going to bring everything else down? No, but it tells you it's an uneven market. Hey, Mike, and so that's kind of the lesson.
Mike, it's Josh Brown. Is it even possible anymore for GICS sector classification to keep pace with the rate at which our economy, the global economy, is evolving? Meaning, you see news that there's an insurance startup that's going to be backed by the family offices of Kevin Durant, Jay-Z, and Will Smith. And they're going to do technologically enabled life insurance contracts. Is that a tech company? Is it an insurance company? Who cares? Why are we even focused on what sector has to lead when inevitably every business is now a tech business de facto?
Exactly right. And obviously, it's all just kind of shorthand. It's all just convenience. We have to have some way to characterize things. But very much to your point, Josh, I mean, obviously, we know S&P is going to reshuffle things a little bit. Maybe it's because what we define as tech right now is almost seeming like it's getting too big. We have to put internet all in one place. Honestly, what the market is really rewarding is secular growth stories. It's you know, we call it tech because that has a huge overlap with big secular growth stories. And you know, I heard the discussion before about the valuations of things like the FANG type stocks. Well, one of the reasons is it's not about looking cheap on a relative basis. It's about you're kind of terrified at all the sectors that those companies are going to kill. And so you don't feel very comfortable owning those, so you can pay a little bit more for the ones that seem like the winners. They have very predictable kind of business models for a while. So yeah, it's very much just a kind of convenient shorthand. Doesn't tell you really much about what the market is telling you.
Yeah.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.